Hello everyone, this is Jordan. This video is being recorded on the afternoon of Friday, September 6, 2024. Thank you so much for joining me. In this video, we are going to recap the week in precious metals and talk about what might be coming forward over the weeks ahead. I hope you all had a great holiday, a great Labor Day, and had a good week, even though it was a rough one for precious metals. Silver down 3% on the week. GDX and GDXJ down 6%, 7% respectively on the week. SILJ, the silver juniors, down almost 10% on the week. Ugly week for precious metals. But look at gold. It was down only a hair, and it strengthened in real terms. And if that continues, that's going to be a really, really good thing for precious metals. Let me get right to the video. So here we have the daily charts. Gold here, gold-silver ratio with the 200-day moving average. And we have this great thumbnail here, which shows the last 3 weeks or so of daily action and the candles. And this is similar to last week. Remember, we had I think it was Thursday, we had this white candle, then we had a dump on Friday. Same thing this time, where you had a strong candle yesterday, Thursday, then you had a bearish engulfing. That's what it's called when the body engulfs the previous candle. Bearish engulfing candle to close the week at 25.25. I'm rounding up. But this candle action is, going back the last couple of weeks, the daily candle action is bearish. There's no doubt about that. And so this is the initial support in the low 2500s. You know, you can call it 2510, or you could possibly draw a little trend line here. But I would suspect over the next week or two that there's definitely a risk that the market could trend down below 2500. Now, ultimately, what we're looking at is these support levels right here on the daily chart. You know, call it 2410, 2430. So I do believe that these levels will be tested over the coming weeks. And silver looks uglier than gold, and when you're in a weakening market or correction, that's what usually happens. Look here at the thumbnail. This action around 29, this week we could say. So it broke below 29 to start the week. Then you had a rally up. You can see it traded above 29. But, you know, it closed a little bit above it yesterday, but bearish engulfing today, engulfed the previous 2 daily candles. So closed the week at 28. You also have this right here. So this is clearly resistance on the daily chart, 29. And we know that 29, going back to the topping process that started 4 years ago, we know that 29 is resistance. So this is just ugly action here around 29. So it looks to me like silver is more likely than not to come back and test 26. I would love to see a nice double bottom here where eventually it comes back to 26, then you get a big rally. So ugly action here, but let's remind ourselves, it's already corrected from 33 down to 28. So if it comes down a little bit more to 26, that's a 20% decline in silver. So the market is always looking forward. It's always discounting, even when we think it's not. So here's the gold-silver ratio. Nice rebound at the 200-day moving average. So this closed just below 90, but this could threaten over the next month in the low to mid 90s. And so just, you know, you could do some potential numbers. What's 26 times 93? Maybe silver could come down to 25 even. You know, what's 25 times 93 or 94? You can see what levels that gives you for gold. I think in the 2300s or around 2400. Okay, let's talk about the weekly chart. It's a similar picture, although for gold, not that ugly. Gold closed off the low of the week. If this is updated, yes, I think this is updated. So the low of the week is actually 2,500. So it closed above it. So that's good to see. It's not a nasty bearish candle like we have in silver here the last 2 weeks. But nevertheless, I'm looking for gold to come down here, as I already said. You know, probably 2410, 2430. This is the next level of strong support on the weekly chart. And then you have here 2350. So those are the levels beyond the next couple weeks that I would be looking at as far as gold and support levels. Silver, it comes back to 26. You know, the quarter is ending this month, so in a couple weeks we could look at the monthly and the quarterly charts. I'm not sure if I'm remembering them correctly, but So they're probably showing support at 26, maybe even 25. So right here, I mean, you can see on the weekly chart, there should also be good support at 25. And you know that precious metals, you get a lot of false moves. So you could see a big dump below 26 at some point, and maybe silver bottoms after that. But, you know, that aside, very short term here, close at 28. There's still downside here to 26. Okay, so even though short term charts don't look great, here's what does look good, or what's starting to look better, and that's gold against the stock market and gold against various stocks. And so gold against the S&P, gold against the NASDAQ here. Here's gold against the equal weight stock market. So that's every stock equal weighted, because this is a cap weighted index. We know the Mag 7, NVIDIA, those stocks have been really driving the strength in the S&P. And so the fact that tech stocks in the Mag 7 and NVIDIA are starting to weaken, that really hurts the market. Even if the rest of the stocks are really not doing that poorly, it's just that they're not doing that great, and that the market strength is mostly attributable to NVIDIA and the other Mag 7. So when the market loses, you know, we heard all the talk about narrow leadership and narrow breadth. When the market loses those drivers, then it really weakens. Then it can roll over, as it might be doing now. So looking at these charts, we see that, I mean, these just look really bullish in favor of gold. Nice, slow and steady uptrend here. You know, maybe here in the next few months, gold has a chance to pull away to the upside. This is gold against the world minus the U.S. Here's gold against the equal weight stock market. I mean, this is a bullish base here, although it's slightly rising. We can see the 200-day starting to curl up a little bit. Ratios holding above it. So this could also threaten a breakout. Here's gold against the NASDAQ, holding the 200-day here. I'd like to see the 200-day start to curl up like that, and this ratio move up and break above that line. That'd be very bullish for precious metals. And then, of course, here, I've talked about this nearly every month for the last 10 years. Closed at 47.47. Not that far away from a major breakout. I mean, if this gets to 0.51, folks, you're closing in on a 3.5-year high. So that'd be really significant. So go back and watch my last video about the 60-40 and how important it is for gold to break out against the 60-40. So if this continues and breaks out, that's going to be super bullish. That could give us the signal as far as gold breaking against the 60-40. That could confirm a new secular bull market in gold, finally. But the problem is we're seeing a little bit of pain, more than a little bit. We've seen some pain. We might see some more pain before that happens in the coming months. Before I get to the stocks, if you haven't already, consider subscribing to the Daily Gold Premium. Folks, there's tons of junior companies out there, and we could be going into a spectacular bull market after this sharp correction and downturn passes. And if we see gold in the next 2-3 years go to 4, 5, 6, 7,000 like it did in the 1970s, I mean, there is a chance for high quality juniors to go up 8x, 10x, 12x, even 15x. That's what I am looking forward to, and I'm looking at the high quality companies. And if you have interest in that, love to have you at the Daily Gold. So consider that, because I think we're getting closer and closer to the point when a secular bull in gold is confirmed, and then you're going to see real moves in the juniors. Okay, so let's wrap it up here with the stocks. So this is the daily bar charts for GDX, GDXJ, SILJ, and these dashed lines, these are support levels that I had leading into this week. Not necessarily bottom levels, but support levels. And we can see, you know, the market is here, it's fallen through that support level, it's come through here. This one, it fell below the GDX, fell below the first support level. So, and here are the 200-day moving averages for GDX, the exponential one and then the simple one. You know, with GDX, I put in these lines here today. So this is where really strong support is for GDX. You have 32 here. That's another, what, 11% down. This closed at 42.62. This should be a really strong support level. Call it 38, so that's close to 10% lower. You know, for SILJ, you have support at 10 or slightly below in the mid to upper 9s. So these are potential support levels and downside targets for the miners. But if we get another day or two of heavy selling to start next week, that could lead to a short-term rally. So keep that in mind. And I do want to point out, even though I think that precious metals are in position where they're going to diverge, they could rise and move higher during this bear market in the stock market. I think we are primed for that, because that's what happens at the beginning of a secular bull in precious metals when it's confirmed. However, when you look at the gold stocks during those periods, 72 to 73, 2000 to 2002, there are multiple times they corrected 20% and over 20%. So looking at GDX, a 20% takes you to 32. A 25% would take you down to 30. I'm not predicting that, but I'm just saying my macro view here that precious metals are going to diverge, that's not without corrections along the way. And we may be seeing one of those corrections right now. So that's where we are. I think we're probably going to see some more downside to come. I'd love to see it the next couple weeks, because then the Fed could cut and you'd be set up for a really good rally. That's also quite possible. So let me know what you think. Thank you so much for tuning in. Hope you guys have a great weekend. I'll talk to you again on Monday for Macro Mondays.